Hey traders, welcome to Charts and Coffee. Hope everyone is having, if not a good, at least interesting morning. I keep thinking of who here's seen Ted Lasso, the series, and there was that fantastic, probably one of the best episodes in the series when Ted is playing darts. I know there's another word for it, whatever that sport is, but he's playing darts against the old owner of the team. This is not a spoiler or anything. And he kept saying, get curious. And I kind of woke up with that episode in my mind today. Get curious. And that's exactly what I woke up doing today. Every time is different, right? That's if you go to, and I love reading posts on X, Twitter, whatever you want to call it. I love reading those posts. As long as you can put your emotions and, X is designed to poke and introduce ideas. But if you can just sift through the different sentiment, maybe people that you like and you follow. I have plenty of those. I have about 27 people, 25 people I actually follow because that's the good information I need. And then you can go into the part where you're just getting general posts from other people. And it's such an interesting sentiment read. So I wanted to get curious. The first thing is looking at what people's time horizons are. A lot of the level of panic anyone might feel, I'm not saying it's not justified to be scared with these times, but the first thing we start to do, because the brain likes to do that, is think about what did we do last time this happened? And maybe there isn't a last time. Maybe someone's trading since 2023 or 2024, and all they know are the all-time highs of 2024 and 2025 happens. That's jarring, and there's very little reference for what happened before. Yesterday, I did a video. And again, I got curious. Yesterday, I did a video, and I probably should have named it something else. I called it Lessons from 2008. My gosh, Rog, you should have just named it Lessons from 2022. So it's easy to forget through 2022, which wasn't that long ago, right? Through 2022, this was the chart. How many of you thought about that? This was the chart in 2022. And if you want a little bit of a understanding in terms of the way that I would compute this, there's some numbers in the bottom of the screen. Let me lift them up a little bit here. Okay, so those are the numbers. That high we saw back in here, which was where we would have been at the very beginning of 2022, was 48.11 and a quarter on the ES futures. And this is a continuous contract. So 4,811.25. A 10% pullback would have brought us to 43.30, and a 20% pullback, there I go, 20% pullback would have brought us down to 38.49. And you can see right here, 2022 in October, if you recall, this was the beginning of the end back then, and it was 35.73. I'm not trying to be Pollyanna here, gang. Yes, the thing that I've noticed the most right now about Twitter is everyone's saying this time's different, right? And I'm here to say none of them are different. The stories are different. Yes, the ramifications could be different, but there's a general gist to the stock market. So if your time horizon is longer, I'm going to stick with the narrative. You want to avoid this fray, which quite frankly, I have not been actively trading, because while there are some very interesting setups with, say, a 1 to 2 week time horizon, or the 2 to 10 for longer term swings that I prefer, the risk to the trades is greater than what I would perceive to be the reward. If there's not at least a 1-to-1 risk reward, if not better, I'm not going to do it. I would rather be flat than be in a position I regret taking. But this is what happened in 2022, again, just 2 years ago. We pulled back over 20%. We're in that area now. In fact, the pullback isn't as bad in 2025. I know it's not done, but the pullback so far is not as bad as what we saw in 2022. So if you go back and say, Rog, I've been trading since 2020 or 2021, you've already been through something pretty darn scary. So I just want to mention that as far as this movement lower. Again, I'm not here in any way to say this isn't awful, but the level of awfulness. So I've been talking to a lot of folks. I've been talking to my aunties and uncles, some of which are a lot older than I am, and I've been talking to their kids who are a lot younger than I am. And I'm telling them two different things, because on one hand, their parents are on the tail end of what I call the touch the money timeline. When do I need actually to touch my capital? And they all know what I recommend. 12 to 18 months before that touch the money date, there's going to be adjustments made in an account. Not, oh my gosh, we're selling off. What do I do? They've already been doing a lot of the things that I've been doing for myself. I'm not here to tell anyone how to invest. That's definitely not the job. But there are trading related trailing stops, targets, right, that we keep an eye on. And I don't care if it's a 20-year, it doesn't matter to me if it's a 20-year time horizon or a 20-day, it's still a trade. All right. Now, when I talk to the kids, I say, look, this is probably one of the best sales since 2022 that you're going to see. Now, they're in their early 20s as opposed to their parents in their 60s. And I've even talked to folks in their 70s. So where you are in that, it's going to very much reflect how you're feeling this. So again, when I talk about this optimistically, I know it doesn't apply to everyone equally, but I know a lot of you are my age and active traders, and we're closer to that touch the money date for retirement. But this doesn't mean this is where we are, period. Now, I saw this image today. It was from my favorite. So I'm a unapologetic fan of X. And this was the post. I don't know Nick, although I like his posts. So Nick posts this image that I'm going to show you right now, and shows the bear market period all the way back to 1929, right? And then the most recent 2020. Now, I wish he would have put 2022 in here. That would have been great as well. And even the pullback in 2024, which wasn't a bear market, but I can show you that pullback at the end of Q1 or the beginning of Q2 of just last year. We had a significant pullback. But, yes, is it going to take some time to recover? The one thing you'll see is, the gist of how long these take to recover. Now, recover means get back to where it was, right? What was the recovery speed? Yes, this could be drawn out. I'm not saying it's not. It doesn't make the potential wish list building and the buying the dips, especially in symbols below 20% pullbacks, it doesn't make those a bad idea. It just means we need to wait for a setup. And yes, I'm even talking for positions we would hold for months, if not years. We still need a setup, right? So he posted this, and I don't know this. I'm sure these guys were just joking with each other. I wasn't around for 80% of these. How did you feel in 1929? And Nick says, I bought the dip in 29. I about spit out my coffee, because it's an attitude, gang. We're all dealing with the same pullback. We're all seeing the same price action. Some folks are panicking, right? And others are saying, hey, I know there's an opportunity. So that's all I want to frame today out with. And again, this was 2022. This was more than a 20% pullback. And if I go to 2024, this was the pullback in 2024, Q1. And this is when we had a little bit of some Fed members decided to start, really talking some smack. So this is basically a 53.20. Let's just average this out. 53.20 high. Let's multiply that by 0.9. That's a 10% pullback. And let's take that same 53.20, which is after that unbelievably great rally in the Q1 of 2024. That's 42.56. Did we pull back 10 or 20%? Not quite, but that was less than a 10% pullback. But that was a pretty interesting amount of volatility after we saw the rally that started 2024. All right, what about this particular pullback? So all I'm trying to show, gang, is whether or not you've been trading for a handful of years or a handful of decades, you've seen different versions of this. Please don't subscribe to this time is different. I mean, of course, everyone's going to have a different perspective, but it's never different. I mean, how many times have we heard this? This time is different. This time is different. And I'm just trying to give everyone a different perspective. That's the only different thing I'm trying to offer. 57, what was this? 57, 27, 22, whatever that was. And the bottom here was 51.20. Gang, that was a 20% pullback. That was a 20% pullback. You can see here on the S&P, this was July of last year. So you've probably got a lot more experience with this than you think. Now you might say, Rob, this is very different. No argument. No argument. This feels extremely different. Okay. But again, I don't want anyone thinking there's not opportunity to be had. All right. Now there are some very interesting things happening in gold. Where are the trends still? You'll see that there was a mean reversion in gold. Difficult trade because of the heaviness. Again, we could either wake up to a candle higher, like we are right now on the 9th, that looks like the candle from the 7th, or we could wake up to a candle that looks even lower, like the one on the 7th. That's what I mean about risk reward and high volatility. High volatility just reminds us that there's a normal amount of movement we typically see, and there's an abnormal amount of movement, and we continue to be in that abnormal. I'd rather focus on risk management, not potential wins. I'd rather be flat. Doesn't cost me money. I don't believe right now is an opportunity cost for swings. Right now, day trades are fine, and short-term swings, maybe. The longer term I've been talking about, I know, nonstop, but I have a sneaking suspicion, for a lot of you too, this is not your first rodeo, that 12 to 18 months from now, we'll be talking a very different tune. So question on Meta. All right. So Meta, and this is going back to the trader, right? Not the longer term position trader, the swing trader. So Joanne asked, what about Meta? Meta would have to be long puts and long puts only. Yeah. So I don't mind a 2 to 10 day time horizon on a daily time frame. I don't know which time frame you're looking at, Joanne. I don't mind a 2 to 10 day time horizon on something like Meta. On the 1 hour chart, I'd have to still stick with being in a long put type setup, still extreme volatility, but there are plenty of things that have downtrends. And if you have the stomach for the volatility that can oftentimes be straight up before things go down, it's going to be it's a tougher bull to hang on to. This is going to feel a whole lot more like a rodeo than not. But yes, Meta would be a swing to the downside. Yesterday, I think someone asked me about Nike and Starbucks. Oh gosh, yeah. Again, by the way, Nike was a dumpster fire long before what we're seeing right now. Nike was a mess before the tariff conversation. It's not going to be any better. Starbucks is going to struggle too. I mean, the tariffs apply to beans and tea. And so, yes, these are going to be, once the downtrend, and this downtrend was in place as of March 20th, not based on the tariff. I mean, if you look at when Starbucks went bearish, the earliest read that I can have on a bearish Starbucks was on the close of March 12th. And then the downtrend confirmed by the close of March 20th. And so since then, obviously the bulk of the weakness has been, very much compressed into just a handful of days. So for those of you that are wondering, Rug, how long were things bearish? Depends on the symbol. It depends on when the candles went red for me, when the trend went down for my indicators for me. But really remember that most of what's been happening of the extreme sort in terms of the sell-off has been happening in just a handful of days. I mean, remember, this was only since last Wednesday. Up until then, we had found a range because expectations were broadly that we have a good grip on what the tariffs will be, and that's what we're expecting. And then in terms of what we're ultimately getting now, this is where buy the rumor, sell the news can turn into sell the rumor and then sell the news. And why would it be sell the rumor, not buy the news? If the rumor did not factor in enough, it wasn't extreme enough, we did not think about other more negative possibilities, sell the rumor, sell the news can happen. And that's exactly where we are. So I would stick to the short side of those things when there's a downtrend and you're looking at short or longer term swings. All right, let's see what else we have here. And again, by the way, I have no interest in commentating on and this is where when I read Twitter, I realize people have just lost their minds and they forgot what their job is. Their job is not to pretend to be tariff experts. I am not. Their job is not to be economists. Their job is not to second guess. My job as a trader is not to second guess any of this because nobody who's making decisions cares what I think, right? My job is to observe what's happening and find the best risk reward ratio possible. Identify the path of least resistance, or in the case of right now, least support. Everything else is, and I get it, it's frustration. I can appreciate that, but frustration is not a setup and it's never made me money. So I'm not going to comment on that stuff. It really doesn't matter, because in the end of the day, you and I are traders. I know part of you is running managing family finances and a business. I get that. But when you and I are talking right now for Charts and Coffee, it's one trader talking to another. And whenever I see all these hedgies on Twitter now start to espouse their wisdom on policies, there's only two reasons they're ever going to speak up. One, the current policies are hurting their position, and they've got a much larger megaphone than we do. Or two, the other reason that they would ever speak up is because they want to convince the public of something and they already have a position. That's okay. I don't begrudge them that. But let's remember, none of these are public service announcements. They're all talking their book in one way or another. So I'm never going to look at that stuff. I'm just going to look at the price action we've got. The market is the pitcher. We are the batter. I cannot dictate what that pitcher is going to throw from the mound, right? I can only decide whether that pitch is something I could connect with or not. And as Grandpa Buffett has taught us, we trade, we live in a no strikes call game. I can let a million pitches go by. I don't have to swing. I can sit at that plate for as long as I want, right? That's where we are in control. All right, next up is on the long bond. Hey there, Dave. Sure. So lots of conversation about bonds. I get it. When I look at what's happening with the bond and I look at earlier this year, I don't know. I have a hard time getting too worked up about this, right? I know it's a lot of volatility. So let's not confuse. And I tell myself this, let's not confuse the speed of something with the scope of something. Have we been higher than we've been? Yeah, that's not really the problem, is it? Yes, we've been higher than where the bond is, but haven't we been lower too? I read the same things you all read. Oh my gosh, yields. Oh my gosh, the 10-year. Yes, all those have implications, which just kind of reminds me. I'm a simple carbohydrate. I look to buy stocks when they're good price. You know who's not running around with like a chicken with his head cut off about this? Grandpa Buffett. Just not doing it. And by the way, if Charlie Munger were alive, neither would he, right? I don't see bonds lower than they have been. Now, remember, when bonds are moving, when the bond like TLT or ZB is moving higher, that means yields are moving lower. And when the bond market is moving lower, that means yields are moving higher, right? So yes, there's a lot of conversation about higher yields, but what I keep wondering is yields were higher this year. So again, a lot of times, especially as I consider myself maybe a slightly above average retail trader and retail investor, right? I'm not a hedge fund. It's not my job to talk about the economy on television, right? My job is to look at where has price been and does this mean something different to me? And Rog, are you at least managing risk? When is your touch the money date? I'm looking at the 10-year, right? I just have a hard time getting worked up about this because my brain goes to, are we going anywhere new? And I by no means underestimate emotion. But the only way that I know to beat back the anger, the fear, all of that I see on X in the post, the anger, the fear, the frustration, the uncertainty, the only way I know to beat that back, I'm not money numb, right? When I look at my accounts going up and down in every which way, yeah, it's frustrating, like everybody. But then I remember, and I know this sounds so simplistic, but you don't lose money until you sell. Right. And if recovery is the way this story usually ends, then I've got to remember I did what I'm supposed to do. I know my touch the money date, and I'll just take a breath. Yeah. So when I look at the 10-year, this was the low on the 10-year back in January, gang. I don't remember everyone freaking out quite as much. It's the speed of which everything's happening. And yes, the chasms between the two, a lot of people are going to make a big deal about, but I just buy stocks and futures. When people start getting into more of these esoteric relationships, yeah, I'll look at currencies too. I'll look at where the yuan is. Are they going to devalue the yuan? Look, the yuan has been loosely pegged to the US dollar for a long time. So if the dollar weakens, the yuan's going to weaken too. So those are things that I want to, just sort of remind folks that the conversations that are being had out there right now are not necessarily always, some folks are, I like to think I am, designed to offer maybe just another idea, another scenario backed with data and price, right? The rest of it is just attention. The rest of it is fear mongering. The rest of it is expressing frustration in this new way, this modern way of, taking to social media, right? That's not going to help you. It's certainly not going to help me. So when I look at something like the dollar, again, the dollar's been going lower for a while. Why all of a sudden is it of nightmarish proportions? Remember, the dollar, the currency of any country weakens. And I know I'm running over a little bit, but keep this in mind. Whenever there's a rate cutting cycle and lower rates expected, the stock of that country, the currency of that country naturally weakens. We are still in a rate cutting cycle that is going to weaken the US dollar. If the euro is strong or the European Central Bank is not going to cut, that strengthens the euro, that also weakens the dollar. And the yuan is loosely pegged to the dollar. So yes, there might be a lot of things going on in terms of what's happening right now tactically around the tariffs, but the dollar's been weak for a bit. This is weakness we've been seeing since February, gang. And this is the weakness we saw in March. And yes, we have another move lower in April, but let's look back and kind of keep our wits about us, because what they're saying, just because someone says it doesn't make it true. All right, gang, I hope that gives you some bearing and some understanding for where we are. I'll see y'all tomorrow, same time, same station. Be good to each other. Keep your head up. If for no other reason, it's the only way you can see the field. I'll talk with you tomorrow.